All right, hello, everyone. Happy Thursday. Welcome to your market check-in here with myself, Greta Wall, your host. I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Happy Thursday, David. How is your day going so far?
Great day. No complaints. All going well.
All right, good. All right, the topic of our stream today is that the jobs report is looming overhead. We are waiting for the Friday jobs report tomorrow morning at 8:30 a.m. Eastern Time. The ADP report came out yesterday, and it was a big miss, 37,000 jobs in May. But as we've seen in the past, the ADP report is not always a barometer or predictor of the official jobs report. Sometimes it is, sometimes it isn't. So we're kind of up in the air on what we're going to get tomorrow. What did you think, though, about the market reaction to yesterday's number, and how are you positioning yourself into Friday?
Thought it was fairly predictable, meaning that right now the market's much more focused and will take, let's just say, the NFP far more serious and probably react off NFP more than anything. So whether it was jolts this week or the ADP, there's signs, right, that the jobs market is finally slowing down, but I don't think anyone's going to react too much till we get the 1 time a month number, which is the NFP on Friday. So I think that's what it was about. And clearly the market's so infatuated with tariffs right now and the positive news flow, including today, that they're looking past it. And it's constantly about, are we talking to China? We're talking to China. There's good news. Oh my God, maybe now it's Vietnam, now it's India. So it's just a unstoppable market till it stops, that I think looks past everything till there's something huge, an NFP that misses so far to the downside that it's not even bullish, it's bearish, because we're behind the curve. So for now, it makes sense. The market just wants to go higher.
All right, before we discuss what you and the Inner Circle have been doing lately, I do want to get your opinion on Tesla and Elon Musk and what is currently happening with him. So, previously the stock was down because everyone was worried that because he was so busy with Doge, he didn't have enough attention on Tesla, et cetera, et cetera. Now he's wrapping up things with Doge and bashing the Trump administration and their spending bill, kind of on the other end of things, and the stock is down 4% today. What do you think about the evolution of the relationship between the Trump administration and Musk and Tesla and the stock, and how investors are feeling about things?
I think it's all really predictable. What I mean by that is you had tons of people who are like, wait till the argument comes, it's going to happen. And whether or not it's been civil, right, it's kind of one-sided. Trump has yet to respond. I do think most of us knew when you have two people with such intense characters, right, and personalities that clearly are neither is timid, there was bound to be something. And clearly it's begun. So the fact that like one deviates from the other, and now it's Musk talking, against policy, that's predictable. I'm actually shocked Trump is yet to really respond in any sort of aggressive manner. In terms of the stock price, I also kind of think that's predictable, as long as you're realistic. So the way I view Tesla is a really overvalued company to any investor that looks out 12 months, to any investor who's investing in a concept that perhaps is so undervalued it's not even funny, because one day they will be the leader in robots, because they will lead in full self-driving, and believe that the sum of the parts, perhaps 5 years from now, based on all they're creating, is minuscule compared to what they'll do, right? Elon himself says it could be the largest market cap company by leaps and bounds. So if that's the predominant investing theme, right, then that means that lately the reason for the move, right, we have poor car sales, which is really the focus of their business, has been Trump and the relationship and how positive it is, and the pats on the back and how it'll help them. So if it's moved up because of that, the minute that dynamic changes, as it has with Elon being so loud and being against policy, then it makes sense the stock would come into me. But it held today. I said, listen, got that 100-day down at 311. If it holds that, it could easily bounce, and it did. So far it's kind of predictable, and it bounced, exactly where it needed to.
All right, let's talk about what you in the inner circle were doing this morning, starting off with MongoDB, MDB. They reported earnings after the close yesterday, boosting guidance, stock rallying. Talk about how you guys, you caught a dip in MDB this morning to get a nice bounce. Let's talk about that trade and how, what levels you were looking at to know when to get in, etc.
So the space, right? Software in general has been really some monster numbers. We saw it from Snowflake recently. So MDB was a focus last night, really one of their better quarters in a long time. And it didn't seem like a one-time mistake. They're really back to growth mode. But stock's expensive. Or I shouldn't say expensive. The stock has gone up a lot. And at 80, 81 relative strength, gapping up so much, I thought, wow, I really don't want to chase it. How do we take advantage of this move? Because I don't think it's over, at least short term. So the way we can minimize risk and perhaps even increase reward is I said, I'm not chasing it. It was, I think, what was it, 238 or something pre-market. Said if we get any sort of pullback under 230, I think there's a shot. So I said, okay, how do we stay in this, have some long-term exposure, but make some money short-term? And that was via the 250 calls, the monthly. We bought them well under, I wanted not well under 3, but I bought them between 3 and like 280, 290. And then it took out, after pulling back, took out the highs of the day. I sold most, not all of them. I sold about 2/3 that we bought at 3. Between average cost is between 4 and 5. Call it like 430, but they traded 5. So as a percentage gain, it was a great win, almost 50% for most of us. And now I hold some, and it's pulled back. It needs some time to rest. It's definitely overbought, but great quarter, and I'll continue to buy on dips. But MDB is now a focus of mine. Just need a pullback to get aggressive. But sometimes you can still be aggressive as long as you minimize your risk. So the way we did it was via calls and had a great percentage gain, and now we sit and wait for the next entry.
Why was your choice to do that via calls instead of stock today?
Because in order to make real money on this stock, you'd have to take some real risk. So do I want to go out and buy 4,000 or 5,000 shares of a stock gapping up 30 some odd points that's at 80 relative strength? That may not feel so good, but could I buy 40, 50, $3 calls and know my max loss and have some time on them? So put much less risk in and maybe make 30, I thought maybe 30%. Turned out we made on some of them 60%. So it was a way to really minimize risk and still be involved in the trade, because I knew, although it might work today, it was overbought and needed time. So thus we went with calls. Some people go use them for home runs. I went with them as a way to actually figure out what my risk was and not be nervous about the trade. Because frankly, buying stocks up above 80 relative strength often, was a little nerve-wracking. So for me, it was a way to comfortably enter the trade.
All right. Another big story happening tomorrow, besides the jobs report that the market is focused on, is the new S&P 500 inclusions. The rumor is that Hood will be added to the S&P 500 tomorrow. You seem to be in the camp of those that does believe that will be one of the picks. Talk about what you've been doing with Hood lately as the stock runs up into that expectation.
Sure. So for me, Hood, it took me a while to embrace this story. I almost felt late, but finally during this correction I did. And I'm really glad it's done an amazing job. Like they have so much momentum and they're beating the big boys at their own game. And they're so much more client focused. So I've fallen in love with it. It's a bad thing to say about a stock, but I love everything they're doing. And now I see what a lot of other traders saw way before me. So we entered on that pullback at 32. And then I was constantly looking for another pullback to enter because it just kept going up. And after getting to about 63, 64, it finally pulled back to 58. I entered there again. Now up here, I've trimmed more than 2/3 of my stock. I bought some calls, to play the inclusion. And here's the way I look at it. There's a very good shot it gets included, but AppLoving's included there. Some people think Datadog's a possibility. There's a good 4 or 5 names that have a realistic shot because Robinhood's become quite profitable and because it seems to be certainly a really popular stock, not just with the market, but retail investors. I really think there's a damn good shot. But it'll be a sell opportunity. I think the stock will need to rest afterwards. I am holding it. I trimmed some quite a bit, but I'll hang out with the rest. And frankly, here's how I look at Hood. I'm never getting flat. And if it has a real pullback, let's say it's not included, I'll actually be, I don't want to say I'm happy, but I'll be excited to get that buy opportunity to buy it back again. So the old highs probably become support, right? Previous resistance becomes support. And that's up there around 65, 66 if we do get that opportunity and it's not included. If it is and it gaps to the 80s, it's probably more a short-term sell opportunity, but big fan long-term.
I want to talk about CoreWeave because it's been in focus this week, of course, for many in the market. Yesterday, what was the last 2 days, right? It was a huge rally in this name. And then today we're getting the pullback down 11% as you and I are speaking. You gave a really good lesson to the inner circle in your morning call yesterday about CoreWeave and how difficult it is to short a name like this. Can you kind of reiterate that for us here and what you were telling the room about a stock like this and a move like we were seeing before today?
Sure. I'll start off by saying I was really focused on a big short. We're pretty comfortable on the short side here, and some of my biggest trades, even in the bull market, were SMCI short, MicroStrategy short, and those blow off tops, and actually Tilray, very short, cost a fortune when Tilray topped out. So naturally, we've been focused on it, but I said we're not quite at that blow off top level, so I'm going to wait. And the way to do these trades is to be willing to miss them, meaning you don't short these false breakdowns every time it's down a few dollars. You don't decide, oh, this is the moment. You get yourself handed a reversal that goes up and makes a new high and keep getting chopped up. You really have to layer into it and really wait for 2, 3, 4 days of expansion on both volume and price, and then they set up well. And I said, you really have to assume you're not going to get the top if you do these and be down a little bit of money. And then I said, for a smaller investor, it's best to just avoid these, right? Or if you're going to do them, overpay for the puts and know that if you don't get a real breakdown, you'll probably get burnt. But at least you know what your max risk is and to never assume it can't go higher. So I said I expected about 170 and that I was open to it going to 200 because there's this gamma squeeze going on with it as well where everyone's buying, calls to the upside. So yesterday I was like a dollar away from getting filled on $150 puts and never got filled. And I said, I hope it keeps going tomorrow. I'll start filling it, and maybe tomorrow's the exact day to get to like a half a position. If we go a bit higher, get to a full position by Friday. Anyhow, we've pulled back today. The bad news is I haven't made a dime off of it. The good news, here's the good news, is most of us in the chat, some bigger than others, tiny, have MBIS. And there is a true role reversal going on today where MBIS has taken front and center stage after a couple of bright analysts have pointed out what a lot of us on the street have been pointing out since it was $20, which is this European conglomerate that owns this, by the way, on the side, full self-driving auto taxi play that they own is really the AI expansion story for Europe. And versus CoreWeave, it's remarkably undervalued. So today, that's off to the races, up 22%. And although I miss CoreWeave, I'm kind of pumped because most of Inner Circle owns MBIS, which today it's been completely re-rated. I told people, some people, because we've been in it, some people have been in it since say like 20 to 25. Anyway, my point is some people are like, where do I take profits? I said, I could be wrong, but I think today it's completely re-rated and most of the street is finally finding out what this is. And MBIS, it was about 44, 45 when I said this, here is probably like CoreWeave at 70 or 80. That it's first really becoming, excuse the expression, a hot stock. So bad news, I missed CoreWeave. I explained you have to do these diligently. You have to assume you're not going to get the top in terms of the CoreWeave short. You have to sometimes be willing to be down to make money or just wait for a full absolute breakdown. So the bad news is while waiting for that, we missed it. The good news, we got it on the other side with MBIS. Quite a pullback we're having as we're talking.
Yep, definitely. All right, another name you've been loud about liking is RKT, Rocket Companies. Stock is up over 8.4% as you and I are speaking. Lots of news after actually pushing this up. So Redfin stockholders approving a merger. That's the latest today. You've talked about how you feel about the, oh my gosh, U.S. housing market, and that's a bit different than how a lot of people feel about the U.S. housing market with rates and where we're sitting and if they come in, et cetera, et cetera. Obviously, Rocket being a rate-sensitive company, since that's what they do. So, what's your analysis on Rocket here at over 13, basically 1350?
So any really good trader, manager, swing trader knows to make real money, you can't always be trading for today, right? Or tomorrow. Kind of have to, because none of us know when stocks are going to move ultimately 110%. So you have to invest. And Rocket at 11, after some of the mergers they've been doing or announced, I said, this is just a monster conglomerate. And this can go so much higher and be a stock you put away and be up 300-400% one day. I love what they're building. So started at 11 and then keeps having trouble between 13 and 14. But I've stuck with it. I keep trimming because I was up a lot. And then every time it's in the 12s, I add back. And I said, listen, it could take 2-3 months for this to move because interest rates are going the wrong way. I'm actually bearish the housing market for about a year now. Everyone said I was crazy. Now I've been proven right. So this is actually kind of the antithesis of my feelings on the housing market. But they're building something so special, I'm willing to be an investor. Little did I know, I actually reiterated this story and how much I like it yesterday. I said, but if you're looking for it to move tomorrow, I'm not embarrassed to say this, you might be the wrong stock for you. Of course, today it's up 8%. So my point is, what a wonderful business they're building where you can search for your houses, you can buy them, and you can mortgage them all through them. It's just, I think they're going to be a monster play long term, and it's something to own and invest. Between Andrew left of Citron and some other news today, it lit up. It's awesome. I did trim a little bit a few minutes ago at 1350, but I'll be long for a long time, and we'll continue to buy dips.
All right, the AI story is obviously still a big thing. I mean, look at CoreWeave the past 2 days and today. NVIDIA, though, not necessarily being the stock that you're buying when it comes to exposure to the chip space. You've been very active in the SOX and SOXL, which is the leveraged ETF, or the leveraged SOX. Talk about what you've been doing with the chip makers and your thesis on this space currently.
So I think sometimes people get caught up with, this is the best company, this is the best story, I got to own it, versus here's the price I'm buying it at, here's where I think it can go, here's my potential downside, because any good trader has to assume what if I'm wrong, where it's going to go. So I keep looking at it. By the way, NVIDIA is like the first thing I bought during the April pullback at 86 and 93. No longer happens. Moved enough for me. And I keep saying, okay, from this point in time, I'm sure it can go higher. And I don't think the AI trade's done, but where do you have better risk reward? And that's what we're looking at via MBIS and certainly via SOXL. So the first thing I think out of all stocks I really bought in April, as I said, probably a life-changing opportunity in the SOX is here. And to be a bit more aggressive, do it through SOXL. So SOXL became basically my largest position in the 7s. I did get flat early at 14 is when I sold that trade. And it kept going to about 17. And I got a bit frustrated and I said, oh, it was a hell of a trade, but maybe not life-changing because I cut it short. So I've been waiting for a pullback. Last Friday, we got that pullback. We entered SOXL between 1490 and 15. The SOX is now full-fledged breakout, well above the 200-day. It's been lagging for a while. And SOXL, given that it's an ultra, is paying us. I mean, we bought it a week ago at 15. It literally paid over 30%. So instead of owning NVIDIA, I own SOXL. To me, it's the same thing because NVIDIA is leading the space. But the other name I keep talking about where I actually not long, I'm a little pissed off, frankly, I'm not, is AMD. I look at AMD and I look at the buyback they're doing. I look at the insider buying. I look at the first halfway decent earnings report. And I think, is NVIDIA the leader? Are they so far ahead? Sure. But do I believe the risk reward is better in AMD? I know this is probably going to piss some people off and say you're an idiot. I don't think AMD can touch NVIDIA. But I think as an investment, especially when it was 110 just a few days ago, it probably presents better risk reward over the next few months. So that's how I'm playing it. Love NVIDIA. It's great. And if it has an aggressive pullback, I'll buy it. But I think there are other plays that present better upside with less downside.
Well, the importance of trading, and especially the way you trade, is the best risk reward, not necessarily the company that is the best. It's just a setup.
It's the best setup that can make us the most money with the least amount of risk.
Mm-hmm. All right. So when it comes to the overall market, I know you focus mostly on the Qs. That's the major index that you're really focused on as a trader.
That's where I trade actively.
Right. But you've joked a few times on Twitter over the past few weeks, the market is never going down, because it seems like every single day we have a dip, they buy it, and we're right back up, or we're flat, etc. So talk about your read on the overall market here. What setups do you like in individual names, and what are the levels that you're monitoring on the Qs, the SPY, etc.?
So I am basically more of a trader up here. I don't think there's a lot of good investing opportunities unless you look underneath the indices, right? Like SOXL last week, or like RKT. But when it comes to the indices, the Qs might very well be trying to test that high up at 540, right? Or they'll fail somewhere up here and have a reversal. We just came from 504 a few days ago. So at any given time, that can happen. So the way I look at the Qs or SPY are their trading vehicles up here. So let me explain. I am not really ready to get all in short the market. Thank God. Had I been, I've been crushing myself. But I am buying, well, I'll explain what I'm buying in a second, but I've been trading the Qs. So one of my better trades this week, believe it or not, was short the Qs. But it was short for an hour. Was it yesterday? It was yesterday or the day before. They opened, they showed a little bit of relative weakness. They took out the low at 529. I had a full position, and I covered like a lot at 527, and then all of it by 526. And I think they went to like 525. Yeah, that was the trade. But I really sized up because I was like, this is the first day we're opening and taking out the opening low. So, okay, you can really take advantage of this. Kind of like MDB today was a very specific setup we do. So my point is, I did it, and I said, you better cover, because at some point it'll probably go green, and sure enough, it did. So my take on the market is, through losing millions of dollars trying to be smart, I don't know the top. I really don't. I just know I'm not wealthy enough to fight it and stay liquid. So I will intermittently get short. I will certainly hedge and buy SQQ versus long sometimes, but I am not ready to say the top's in because I don't know where it is. I know there are a lot of things that aren't making sense, but there are other areas of the market that have lagged that might pick up, steam and kind of cover for some lagging in other areas. Let me explain what I mean by that and just sound more logical. Maybe it's IWM. Maybe it's small caps. IWM finally got above the 100-day and is showing some life. We've got the NFP Friday. So I'm not willing to call a top, because if we have rotation and if financials start to work and go back to highs, or if small caps start to work, the market can just keep grinding higher. I'd like to see a pullback, because it's not a lot of fun buying things up here when we were buying Qs at literally, we bought the low. We didn't kind of buy it. We went out there and bought and bought and bought TQQ and SOXL and NVIDIA. I really felt comfortable. Up here, I'm not. But I'm not going to be an idiot and lose my year, which is a hell of a year, trying to call the top. So I am basically a trader via the indices, looking for pullbacks to own top positions, and we constantly do it. Kava all week. Every time it was under 80, I bought it. Yesterday, it bounced to 83. I said, listen, every time it bounces, it gives it back. So you want to trim some. So we trim some, and I'll buy it back. IONQ all week pulled back, well, not all week, but early in the week, pulled back to like 38, 39. We bought some. It ran to 42. I sold 2/3. And that's what we're just, the market is only gives you so much. I personally see less opportunity because I'm not a chaser. Doesn't mean there's anything wrong with buying HIMS up 3 and making the next 7, but I find a lot of people chasing HIMS, Palantir, CoreWeave are getting their butt handed to them if they're a day too late. So I'm kind of saying, okay, where am I comfortable? Where do I see risk reward? And it's not quite as opportunity. The opportunity is not the same as we saw in April, but there's still tons to do. So as long as you don't overdo and play everything, there's plenty of money to be made. May not be as, in April, it was just like gangbusters. So now the market will stop when it wants to stop. That, I don't know when it will.
So what is that list of names that are under the hood for you that you're looking at for opportunities to buy?
So RKT, love it long term. Immuno, name I talked about all year. I've talked about it higher, but sold most when it had the crazy run to 30. So recently, when I first got aggressive, again, it was during the April correction. It was at $5.80. We're right now at $9.17. Not a bad return. Every real pullback since this rally, we bought. 750 was one, and 850 was one. So constant buyer, CEO, the entire company's bought stock. I see no reason why this isn't 20 or 30 over the next 12 months. Stock sell, I'm a buyer if you get any sort of real pullback, but I do not think you'll get one. IWM is what I'm staring at. I can't tell if I'm going to embrace the small cap summer or not. I'm embracing the stocks. Like I have these Oscar calls, all of a sudden they're alive today because Oscar's up. I have this RKT, I have Immuno. But IWM is something to watch going into the NFP. Is it ready to kind of play catch up to the rest of the market? And then finally, MBIS. I mean, how do you not really focus on this stock on dips? It is having its first real moment. Has it broken out before? Sure. But this is its first real moment. I believe this has another 10, 15 points in it. And then as far as core fundamental companies that I adore, that would be Kava. That's expensive. I understand it's not valued in a way that a lot of people want to own it. My thought in being a customer and someone who appreciates the CEO and the chairman, I don't think it's ever going to be cheap. I just think it's going to be cheaper. So I'm constantly a buyer. Those are some of my favorite long-term plays. But AMD in the AI space, I really think there's a name that has a lot more risk, a lot more reward than risk that you want to focus on. So those are some of my names right now. Oh, sorry, in the quantum space, this QBTS I called as my favorite name at 7 during the correction. I got a little foolhardy and I started selling things when everything started going up, and I sold it way too soon. This has done nothing, even though it's the smaller play and it's not IONQ like in terms of fundamentals. It's a tiny little baby company. It has been the leader in terms of price. This is one to buy on dips. QBTS, this D wave that is beating numbers, but the numbers are tiny. This is a quantum stock on any real dip. They just did a $400 million filing. Hopefully they'll do a convert or a secondary to present some weakness to buy. That's something I want to buy.
All right. April was an exciting month, as you mentioned. May, the beginning was kind of exciting, and then it feels like we just traded in a range for all of May.
Well, we just grinded higher and higher, and
slowly
minimal. And then when you got them, if you didn't buy them, you were screwed. Example: yesterday, Snowflake is one of my favorite long-term charts in the market. It's just over that two. It's explosive, right? And the fundamentals back. And I was waiting for the pullback, too cute, never got it. And yesterday there's this AT&T hack that comes in, and all of a sudden Snowflake goes from like 214 to where was it? Like I think we were 205. But anyway, point is 206.80, 207. I'm like, I'm buying Snowflake. There's a stock to buy I like. And that's the market we're in. Sure enough, I bought it. Same day it went to 210. I trimmed a bit, and today it's 212. So you just have to basically have your names ready, the ones you want to own, understand the environment, which is higher highs, and eventually will come in. I don't know when it is, but there's money to be made. I mean, I don't know, I made $5 on Snowflake in less than 24 hours, so I have no complaints. But I guess if I didn't know I liked Snowflake when that hack occurred or the news of the hack occurred and it came in, I probably would have froze. So you have to know what you want to own. So if you get those opportunities, you don't think about them, you just act on them.
We're in June now, and June is the third worst month for the stock market is seasonally and historically. How are you feeling about June 2025? And then I'll let you go.
I feel like I might steer someone wrong here, but I feel like there's so much more downside than upside. The question is, do we go up 3% before we drop 5-6%? So I am definitely more bearish. I have to say I'm more bearish. I get it. All the charts point positive, everything's positive, but I'm not going to like try and sound smart and look cool and say, I'll simply say it's really dangerous to fade such a strong trend. I'm not doing it, but I'm bearish here and I'm waiting for that opportunity. Thus, when I saw the Q show some weakness, I got aggressively short for a moment on, let's say Thursday, on Tuesday, and made a few bucks. But I do believe the Qs will yet again be down 10, 15. I just, any moment, I just don't know when that moment is. They might go up 7 or 8 before then. So I am more bearish than bullish, but I'm not acting on it. Let me give you an example. CrowdStrike is an awesome company. It is the leader of all leaders. Kira, my partner, bought it like 150 points ago, and like we were talking during the correction, she's like, what are the like favorites? I'm like, gotta own CrowdStrike. Me, like a bozo, didn't buy it because I was focused on NVIDIA and others. She did, and held it the whole way. Then recently I said, listen, into this print, there's so much more risk than reward. It's priced in everything. Point is, yesterday, they kind of proved like numbers are fine, but they're not growing at the same rate they used to, and the valuation is sky high. So into the bounce yesterday off lows, we bought some puts. Today, they went from, I bought the puts at 11.70. I bought more yesterday because the puts went down at 10. Today, those puts went to 13. And sure enough, I said, you know what? Being short is hard. All right, I just made a decent percentage on these puts. I'm going to sell it. Sure enough, the market went positive. CrowdStrike bounced. My point is, I'm renting shorts. There'll be a moment to be more aggressively short. For now, I'm short 5-10% of the time. Few trades, and there's plenty of money to be made. As long as you don't overstay your welcome, because God knows when the market's going to pull in. So my thoughts are, I'm bearish. I'm not acting on it. So there's a reason to.
All right. We are hosting a free webinar next week, me and David, for people to learn from him and get his summer game plan. If you'd like to register for that, you can go to t3live.com/DP. It's going to be next Wednesday, June 11th, after the market close. We'll be including some special things in our offer there for everyone to get some more one-on-one time with David, or closer group time with David. So again, you can go to t3live.com/DP to register for our free webinar next Wednesday. Again, that's free. You'll get David's summer game plan, learn more from him and how he thinks about trading, and be able to ask some questions. All right, David, have a good rest of your trading day, a good weekend, and I'll see you next week.
Thank you. Have a great weekend, guys. Take care.
All right, bye.